Looking ahead to the trading week beginning November 24th, which is a holiday shortened week in the US due to the Thanksgiving holiday, we need to watch the evolution of Fed rate cut probabilities. According to the CME Fed Watch tool, the probability of a 25 basis point cut at the December 10th FOMC meeting has jumped from 39% on Thursday of last week to just under 70% on Friday. That's a big swing, especially considering it was as high as 98.1% back on October 21st, so expectations have clearly been volatile. The key question next week is whether this move turns into a real trend, particularly after New York Fed President John Williams appeared to open the door to a cut over the last two sessions of last week. The shortened holiday trading week also raises the risk of exaggerated moves in stocks and commodities like gold and silver because of thinner volumes. That comes on top of two of the last 3 weeks finishing lower in the Dow, 3 straight down weeks in the NASDAQ, and 4 consecutive weekly declines in both the S&P and the Russell. We also need to keep an eye on the upcoming releases of GDP and PCE price data. This week's preliminary Q3 GDP and September PCE data are actually delayed prints pushed back by the government shutdown. That makes them even more important, believe it or not. GDP will update the Fed's view on growth momentum, while PCE, its preferred inflation gauge, will heavily influence how confident policymakers feel about cutting rates into December and into early 2026. Now, looking ahead, next week we wind down earnings with 44 companies with market caps over $1 billion reporting, including retail names like Alibaba, Dick's Sporting Goods, Burlington Stores, Best Buy, Deere & Company, Analog Devices, Dell Technologies, Autodesk, Workday, Zscaler, Zoom, HP, and Agilent Technologies. Now, data next week. Monday, we get German business confidence data and industrial production in the U.S. Tuesday, we get German GDP, U.S. retail sales data, existing home sales data, and PPI. Wednesday, shortened trading day in the U.S., but we will see U.S. jobless claims, durable goods, GDP, Chicago PMI, and new home sales data. Thursday, no U.S. data, but we will get German consumer climate and Japanese CPI, as well as Japanese industrial production. And then Friday, another shortened day in the U.S. In the morning, we see German retail sales, their employment data, their CPI, and then Canadian GDP.